Hi Jay, good morning.
Hi, Ramya. Good morning.
So Jay, since this is a big week for the Mag, a few of the Mag 7 earnings, I wanted to have a quick chat with you. So coming to so we have looked at the covered call. Um, there are also multiple other earnings that are coming up in the next couple of days. So if you go back to that earnings calendar, Jay, yeah. So I see that Amazon has its earnings on Thursday, and I currently don't have Amazon in my portfolio.
Mhm.
Just a week back or so, I know Amazon was much lower than what it is today. So I'm wondering what are my options. Um, I believe there are some option strategies where I can try and acquire Amazon for a lower price than what it is at right now. And in case, Amazon stock goes down after earnings, how can I play that?
Great question, Ramya. I think it's called as short put or sell put. When you sell a put at a particular price, if it goes below that strike, then technically you're obligated to own the stock at that particular price. That is a short put, and you can do it in two different ways. One is a cash secured put, the other is using your margin to play that. But regardless of whether you use margin or you block the cash for that, if it gets assigned because you have the obligation, you need
Mhm.
to have that cash to own that stock at the strike that you are trying to get in. So let us look at the option chain for Amazon.
Okay.
Choose puts instead of calls. And again, I will remove the weekly and go for, let's say, December 19, 2025. Um, is less than 60 days from now. And what is the price that you are willing to pay for Amazon? One is looking at the delta values and all that. But before that,
Oh,
what I would do is, am I willing to own Amazon at 210? Am I willing to own, because you would have probably wanted to buy Amazon when it was at 200 or 210, and then but you missed that chance. And then
right.
now it's gone up to 230, right? That is
Right.
what you
Yeah,
would.
I think even maybe last week it was around that 215 price. So yeah, 210 sounds like a um, 210 or 215
210
sounds
or
good. And that is also kind of like a maybe like 210 is like almost like a 10% drop from where it is right now.
2.
So yeah, how about 210 as the
Yeah.
strike?
In fact, to be honest, for December 2025, all the strikes that you said has pretty good volume as well as open interest. So, which is a good thing to have. So, if we say 210, that is having a premium of anywhere between 435 to bid ask is
Mhm.
435 445. So, technically, because you will receive this premium when you write or sell or short, all of these things mean the same. They say
Uh-huh.
write a put, sell a put, short put, everything denotes the same thing. So when you do that, then when you write it at 210, you're receiving this cash upfront. So technically, if it gets assigned, you will own it at $206 per stock. That will
Mhm.
be the cost basis because you're
Okay.
receiving this premium upfront.
In advance. Mhm.
Receive this at 210. So, and it's 200 and one other thing, see, the other thing that you can also see is you said 215 as well. 215, if you actually, because since you said you're okay to own it at 210, I would rather pick 215 because that is giving me a premium of 575 to 585, anywhere between that.
Mhm.
So it will be, since your if assignment happens, it will be at exactly at 210 if you pick
Okay.
250.
All right. Okay.
So let us try and simulate this. Add a simulated position. I'm saying calls and puts. Sell to open you have to do 1. And then I'm choosing December 19, 2025. And I'm choosing 215.
Okay.
And so the price is 580. So what happens is around earnings, the reason why it is good to do it around earnings is because the premiums are typically super high because of implied volatility just before earnings. There might be a skew on the put or call side, which right now let us not bother about that because we are going by the sentiment of am I willing to own Amazon at 210?
Right.
So, which in my view is a good way to trade options. While you can do look at all the technicals and all that, but if you're fundamentally okay to own Amazon at this price, if you enter this and after earnings Amazon drops to, let's say, actually technically if it drops down below 210, it is showing, because this is showing this particular contract itself, but if it gets assigned, you will basically own this stock at, you will have to mobilize 20,000, close to $250,000, $21,000 to own
Right.
this.
So this is typically this could happen anytime between now and December 19th, because I understand that in the US options can get exercised anytime up to expiry, and then, but very likely because we saw so much liquidity for the options, very likely that I'll only get assigned closer to December 19th if Amazon is at or below 215.
Absolutely. Right? You're spot on, Ramya. The reason being, this being one of the Max 7 stocks, people won't dump it immediately. They will want to wait to see if it recovers. But if it recovers, the good side for us is the number of days that you're holding this is actually helping you to gain more. For example, this is today. Then let's say Amazon stays at 230 itself, or let's say if it stays at 220, if it goes to 220 after earnings tomorrow, you will lose this much on this one, right? But this is technically on paper. This is your loss on paper, right? Because you've received the premium, and that is going down. So let's say if it stays at 220 on November 7th, this losses come down.
Right.
And if it stays at 220, let us say on December 5th, as you can see, it is staying at 220. You are actually gaining on this contract. You can close this contract for $185, meaning that when I say $185 profit, you would have received $575 already. You will technically, when you close this, you will give $575 minus $185 only back to the brokerage.
Okay. So I have to give money back. That's what I have to remember.
But one thing is, if it keeps going up, and you had a very valid point, right? You are desperate to own Amazon, and it keeps going up. Then you are limiting your upside in the sense that you will at best you will only
make 575. So I lose out on the gains in the stock if I bought it right now.
Exactly. So some people, what they do is, instead of going for 215, they might even see, for taking the assignment, the other option is you can go a little aggressive, and but you should be mentally prepared to take the assignment at that, and then let's say even December 2025, or you choose a closer date, November 28, and possibly go at the money, which is 230 itself. See, if you actually see this one, what did I do? This is sell put, right? Yeah. So if you can see, you're technically willing to own Amazon at 220, not 210 or 215, because you are receiving $1,000 upfront, because you are bullish about this. You can go 230, or you can do November. You can reduce the date. You can play it around based on what you feel is right. You don't
Mm.
have to go till today's October. Like, you can even do a weekly one and then say 220. So this is like, this is, see, as you can see, 220 minus 4. So you will technically own it at 215.90 is your break even. But you're okay with owning this at this, and this is also much closer. So the chance of
Mm.
assignment is much higher here.
Okay.
So you can
Right.
do that as well, because you can play around with this and then see, look at the options chain. And typically, closer dated options will have good volume and good open interest. So you will not have issues with fulfillment, or the bid ask price will not be uh, too crazy and all that. So these are couple of ways to get
Okay.
into the stock.
So I
If you
think the two thoughts are like if you really want to own the stock, then go for like an aggressive price closer dated one. But if you're looking to make money off the premiums, then go for a really safe price that you're willing to own at a lower delta that you were showing, maybe, and also like a little bit away from the earnings. So that way, even if the stock goes down, it still has time to recover. So I guess two thought processes: if you really want to own the stock versus you want to just play with the premium.
True, true. And there are people who play very long dated as well. I mean, but that you will have to go, like I said, no, even we discussed in the covered call one, you have to go through. But typically for short puts, for taking assignment, for playing
Mm-hmm.
around earnings, getting into a short dated one, and just play for the upside is good. If it goes up, you gain value. Or if it gets assigned, you're anyways okay to take the assignment at that price.
Correct.
That is the mentality. I mean, instead of thinking of making money out of the short put itself, you feel like it has gone up a lot, and you
Mm-hmm.
want to technically own at 215 or 220 or whatever is the strike, but you don't want to sit on the sideline. You
Mm-hmm.
want to be playing the game, so you enter this contract either by keeping setting aside the cash required for this, which is the cash
Mm-hmm.
secure, or using your margin money to play this. Because if you're using, actually technically, if you're leveraging your margin to play this, even to just enter into this option alone will give you a very good return. Because if this is going to hold, let's say 3K or
Mm-hmm.
$4,000, then you're going to get $575 within a couple of days playing around the earnings. That is still a good way to make your money work for you, if I may say.
Okay. Yeah. Yeah, definitely. So,
A couple of things, and especially the reason why I'm saying what I'm saying is, you won't find this level of juicy premiums after the earnings. So, right before earnings, entering something like this makes a lot more sense, rather than one is earnings, because the reason is the implied volatility is high. So, that can go high anytime. I mean, whenever the stock falls down and there is some other macro event happening and the implied volatility, typically, people want to hedge it, and then the put will get loaded with lot more premium. So, entering during that time and playing it to your advantage can give you a hedge over, I know, many
okay.
other players who are just sitting and watching how it plays.
All right. Okay. I think a couple of things for me to think about and take action on.